Hello, welcome to another business learning session with AMFET2. Today we are going to discuss about one of the India's leading premium airlines, Jet Airways. Its milestones we'll run through, we'll do a business analysis, then before concluding, we'll go through the SWOT, strength, weakness, opportunity and threat. Jet Airways had a market cap distribution like this. Its founder chairman Naresh Goyal had 24%. Its international airline partner Etihad from UAE, Abu Dhabi, they had 12%. SBI led, State Bank of India led bank consortium had 51% and a public share of 13%. Let's run through the milestones of Jet Airways. Jet Airways got approval from Airport Authority of India on 14 January 1995 with marketing agreement with KLM Airlines. In 1996, they placed an order for 375 million US dollar for four 737-400 aircraft and six 737-800 aircraft from Boeing. In 1996, they had a market share of 20% and emerged the second largest just behind the state-owned Indian Airlines. In 1998, the airline had a fleet of 12 Boeing 737 aircraft and was operating 83 daily flights to 23 destinations in India. In June 1999, Jet Airways announced an order worth 550 million US dollars for 10 Boeing 737-800 aircraft. By April 2001, the airline had 30 aircraft and operating over 195 flights daily to 37 destinations with India. The airline launched its first international flight in March 2004 from Chennai to Colombo. Jet Airways IPO was on 28 December 2004 and got listed in Bombay Stock Exchange. On 17 April 2019, Jet Airways was completely bankrupted and grounded all its aircraft. So this is a brief history, and now let us run through detail on its strength, weakness, opportunities and threats. Certainly, Jet Airways had alliance and understanding with reputed international airlines, a code-sharing agreement. Example, Etihad Airways of UAE, Air Canada, Air France, Korean Air, Virgin Atlantic, Qantas. So that was a major strength. And again, another opportunity which it tapped on with a compound annual growth rate of 11% in the period 2011 to 15. The airlines industry had expanded its operations and increased number of flights to international destinations and domestic routes. This was a greater opportunity in front of Jet. But when we understand the threat factors, the low-cost airlines like Air Deccan, Indigo, Go Air, even including in the domestic market, and also a few other airlines in Middle East and other Asia regions, they were a major threat to Jet Airways. Then another opportunity point, the international tourist arrival had increased by 4.4 percentage as per the statistics of United Nations World Tourist Organization in 2015, and the company operated in 20 plus international locations. Jet Airways was operating in 60 plus Indian cities and with 400 plus daily flights, a major strength factor which it got empowered. The company had a debt over 8,500 crores, out of which rupees 800 was of equivalent foreign currency dollars, a major weakness which all got tremendously, very dangerously affected the business. Then more competitions from Indian domestic market, as we said earlier, AirAsia, Indigo, Air Deccan, Air India. So which was a major threat. And another strength factor which it got added, strategic alliance with Etihad Airways, which helped him Jet to expand its market. Customer complaints, the weak factor was customer complaints were very continuously happening, and company couldn't take any proper actions to resolve it. And the customer service and the entertainment, the launch and frequent flyer programs all were boosting up the customer engagement on the other side, which was a strength factor. The rising fuel cost, an external factor, certainly we should consider as a threat. So another strength factor, internal strength factor, was including Naresh Goyal, the promoter, the founder. They had a very wide, vast airline travel booking experience. Then another threat was they were trying to manipulate the airline ticket price, the price war, to compete with the low cost airlines. And another threat factor, the regulations from the regulatory norms, the bodies, including Director General of Civil Aviation, and the series of complaints factor and no contemporary updations on that, which had largely affected the operations and the cost factor. Jet Airways and its strategic partner Etihad, they signed an MOU with government of Maharashtra to support the tourism in the western states, which was an opportunity they tapped. Another weak factor, as we explained earlier, customer grievance, which they had a very slow response. They had a 13,000 employee strength. One way we can see that as a major strength to operate highly efficient and make the routes, schedules as per the need. So that was a strength. But when the company was going again and again on losses, a larger number of labors can become a weakness factor. This is something which the business students should really understand. Based on the situation, the strength factor and the weakness factor varies. It's a relative term. And international market share was low, and largely it was dependent on the domestic revenue, a weakness factor. So to empower its operations and booking, the online application was launched, the smartphone application. So another opportunity in front of the airline industry, especially for the premium sector, was the growth in Indian economy, by which more and more passengers were shifting their mode of travel to air. So to compete with the low-cost airlines, Jet Airways had acquired Air Sahara for a whooping sum, and that was a very large amount by which the cash flow was really stuck, affected. So that had become a weakness factor. So it was supposed to be a strength factor, but it turned out to be a weak factor. And again, internal issues like unclear job responsibilities of the staff, the salary processing difficulties, bank loans, so all that turned into a cash crunch situation and an internal weakness factor. So the threat factor again from the external government bodies about the regulations, and due to changes in the management positions for every 2 years, the company could not work on the predefined strategies. So that's again a weakness factor. So after listing down and categorizing all these features and factors, let's put it on a SWOT matrix. So all that strength factors comes on the S, weakness on W, opportunities on O, and threats on T. So by this, a business analyst should be able to recommend the strategy by which it should run, work, do action in the succeeding years. So that was expected. But Jet Airways had gone bankrupt, and all its flights were grounded. So surprisingly, we have another news in discussion. So by 2021 summer, Jet Airways 2.0, the second coming of Jet Airways is expected. Yes, true. So the new investors are from London, the Calro Capital, and US businessman ML Jalan. They are planning to infuse 1,000 crores in the Jet Airways 2.0. The airline carrier also intends to operate all of its historic domestic slots in India. And like before, the main hubs are expected to be Delhi, Mumbai, and Bangalore. And certainly the sub hubs will be created in tier 2 and tier 3 cities. In addition, Jet 2.0 will also include its cargo facilities.